Good morning, everyone. It was consolidation day yesterday. Markets generally moved sideways as a lack of progress on the U.S. fiscal cliff dominated trading, outweighing good data from the U.S. on retail sales and jobless claims. Within this generally trendless trading, though, the yen, the pound, and the Swiss franc came under further pressure from some bad domestic news that they had. The yen is the usual story. Further pressure on the Bank of Japan after Sunday's election. People expect that after the Fed announced new easing measures this week, the Bank of Japan may have to do something at its next meeting, policy board meeting next week. Add to that a disappointing Tankan survey of corporate sentiment released overnight, and further tensions with China in the air over those disputed islands, and the yen weakened further, which we expect to continue until further notice. The pound fell versus the euro after UK factory orders disappointed, with the next Bank of England governor, Mark Carney, talking about radical easing measures that go even further than what Dr. Bernanke has instituted in the US. We expect the pound to keep easing over the next few months. The safety flows into Britain are diminishing. There isn't that much support for the pound. And finally, the Swiss National Bank met yesterday and reaffirmed its pledge to put a floor under Euro Swiss at 1.2 no matter what. So the pair fell back towards that level. So investors are spoiled for choice for currencies to sell. Well, what to buy? Well, the commodity currencies seem to be on a roll now. They're slightly depressed at the moment as the fiscal debate in the US raises questions about US growth. That means when these fiscal cliff problems are resolved, as we expect, these currencies should rebound and move even higher. So we think traders should look at buying the Australian dollar and the New Zealand dollar, especially against the yen and the pound, which, as I said, are under long-term pressure. Buying the euro versus the Swiss franc seems like a low-risk, low-return pair. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you good trading.